the CMO of Pendo had a quote that was team determines tenure in an investor-backed company, and that how CMOs and CSOs and CFOs get longevity in their role is they build kick-ass teams. And the way that you do that is you go out and you say that my job is to do that. I got to get all this other stuff done, but what I need to do on top is I need to find these great people. And like at Bloomerang, I talked about before the company, we called it company success. At Bloomerang, we don't call it G&A, we call it GSD for get shit done. We've got t-shirts, we've got logos, right? And it's literally the ethos of the team that people live and breathe. And it's got to a point where it becomes self-reinforcing, because it's like we've established the credibility as the team that isn't afraid to do really hard work, isn't afraid to go really hard. And we're now at the point where we're holding each other accountable.
Wow. Is this thing on?
Yesterday's price is not today's price.
Well, we are back at it again. And this is a fun one. It's with my buddy Steve Isom, the CFO of Bloomerang. And he's just a good time Charlie. You know what I mean? He's a fellow BC Eagle. I think that's why. He used to go to Pino's Pizza late night as well. We talk about what does strategic really mean when you talk about, I need a strategic CFO. Are they just saying that they want a person who does not have a cardboard box for a personality? Are finance leaders actually equipped to be strategic? And then how do finance leaders avoid just making the business a math problem if there's a risk in over-optimizing for data inputs without actually talking to the humans actually orchestrating them? And speaking of that, how important is it to get out of your finance box and talk to individual contributors? Paul Graham had this whole founder mode thing, and my whole take on it was it's really just talking to people who don't report to you. As simple as that. Do you ever talk to customers? Steve does. Be like Steve. And what does it mean to be the umpire as a finance team? Finally, we talk about transaction readiness, what it means to run a great due diligence process from start to finish. This guy closed a deal in 31 days and they weren't even anticipating it. So kudos to him. Steve's a good guy, and we're going to have him definitely back on the podcast. You're going to enjoy this one. All this and much, much more after a short word from our sponsors. Ready to plan confidently, close faster, and report with accuracy? Here's what sets Planful apart. Imagine purpose-built solutions for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. It's easy to implement Planful in just weeks with minimal IT involvement, enabling seamless collaboration across your organization's key financial workflows. Best of all, Planful grows with you. Its unmatched scalability ensures that no matter how fast your business expands, Planful can keep up. See why over 1,500 customers worldwide choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Visit planful.com/metrics to see how you can elevate your team this year with Planful. They will hook you up. It is planful.com/metrics. Tell me your boy CJ saying planful.com/metrics. Does your revenue recognition process feel like a total guessing game? Step right up and pick a card, any card. You're not alone. Revenue accounting is getting more complex, especially with subscription models, usage-based billing, and evolving compliance standards. Woohoo! RightRev is here to help you gain control over your revenue accounting. RightRev automates the revenue recognition process from end to end. Whether it's multi-element arrangements, subscription renewals, or complex usage-based contracts, RightRev takes care of it all. That means fewer spreadsheets, fewer errors, and more time for your team to focus on growth. Customers like Snowflake, Logic Monitor, and Epicor chose RightRev to manage their high volume and complex revenue accounting. CFOs can see the bigger picture faster without being held up by their team's reporting nightmares. You know me, I'm a business model fanatic. And don't get me wrong, I love all the evolutions. We've got self-serve revenue, usage-based revenue, and now even success-based revenue, you name it. But that doesn't make it any easier for us bean counters on the back end to keep score. RightRev is like a cheat code for staying ahead of revenue complexities. So you're ready to transform your revenue accounting? Visit RightRev.com to schedule a demo. That's RightRev.com, and tell them your boy CJ sent. RightRev, modern revenue recognition simplified. Oh yeah. People think that I'm having you on this podcast, Steve, for for your intellectual insights in being a CFO, but you, I hear, are a Lego influencer in your own right.
I was going to say I don't have the background blurred right now, so I can't hide from it. Yes, during COVID, I used Lego to cope with being all alone in my house, and like most things I do, I went all out. So
you really did. So what's the favorite piece that you've built?
I've got you can't see it. I've got the Eiffel Tower behind me, and I've got the Titanic, which are the two largest Lego sets ever. And
Wow.
Not the most fun to build, but they look awesome. Here.
Now, when you build it, is there one of your children helping you, or is this like a you thing?
For all the sets that are in my office, which there are a lot, it's a me thing, but all my kids are now super into it too. So over on the weekends, that's typically what we do together. And then we usually fight if we build a set together on whether or not the set is going to be displayed in my office or the set's going to be displayed in their bedroom.
That's amazing. I tried to get back into collecting baseball cards during COVID, and my wife told me to kick rocks.
Yeah. I always say, like, it's so much better than the alternative. I'm not gambling on sports. Yeah. I'm not going to a casino. I'm not going out and drinking. I don't golf. Like, golf's expensive. So it is a super expensive hobby, though.
Yeah. I went tangent. We had a team offsite in Minnesota. We went to Mall of America and we went to the Lego place there. And I was like, did inflation kick in? Because I don't remember like the Starship costing $550 when I was a kid.
Yeah. Inflation or the excuse of inflation has hit Lego quite hard on prices. But yeah, it's definitely, I mean, the thing that Lego did that's super smart. There's an awesome book about Lego called The Lego Story. And one thing they did that's super smart is they just realized, well, wait a second. A lot of millennials are suckers for nostalgia. And what do they have now? They have disposable income. So, really ramped up during COVID, this focus on marketing to adults. And what are they doing? They're like, oh, here's a Nintendo, or here's an Atari, here's a Pac-Man machine. Here are all of these things that, you're like, oh my God, I love those as a kid. I could never get my parents to buy me a Lego set because it was expensive even when we were kids or when I was a kid.
Yeah, the price elasticity it hits different if there's nostalgia attached to it.
Yeah, absolutely. And then Lego says, "Oh, it's because of the licensing cost." But yeah, it's been a good distraction for me. I tend to do it late at night when all the kids are asleep, and I sit in here in silence doing it.
Yeah. Just thinking about the P&L.
Yeah, just thinking about the P&L. Exactly right.
So me and you were riffing on this beforehand, and I don't know if you've seen any job recs floating around lately, but it seems like the most common requirement for a CFO in 2024 is that they're, quote, a strategic finance leader. And so did you have that term on your bingo card for top finance buzzword?
I think every search firm, when they send you an email or LinkedIn in-mail message, says, this is a little bit of a different opportunity. They're really looking for a strategic finance leader. And the investors really know that the CFO is the one that can really move the needle. So yeah, it is definitely one where I think the word has lost all meaning on what it actually means. But strategic finance leader is definitely what everyone apparently needs to be in 2024.
The first few emails, I was like, wow, they must think I'm special because I truly am strategic. I am not just an X's.
It's perfect. You are speaking directly to me. I do view myself as a strategic finance leader.
But in all seriousness, what does strategic mean to you?
Well, you and I have joked a little bit about a strategic finance leader might just be someone that your CEO or leadership team doesn't hate talking to. And I think there is some truth of that, of being someone that people enjoy working with. Obviously, there's a lot of stereotypes of finance people that have persisted over the years. And when I first got into corporate finance, one of the compliments that I would receive, and I wasn't quite sure how to take it, was, hey, you're not very bad for a finance person.
Yeah.
I was like, okay. Like, that's a really low bar to clear, apparently. But I do think how you interact with people is part of it. But I think the other one is you're just more business minded. So not so much focused on risk mitigation and compliance, but driving value in the business. And you come to the table with solutions, not just problems. You're not just the doomsdayer of like, oh, this isn't working, or if this doesn't happen, we're totally screwed. And you're on offense, you're not on defense. I think a lot of CFOs view their role as defense. I'm protecting the company. I'm protecting the company from all of these bad things that could potentially happen. And that is certainly table stakes. But that is such a shortchanging of the opportunity of what a CFO can do, because the CFO has the ability to see how all these disparate parts of the business come together, and through the numbers tell the story, right? Of like, hey, I know you're experiencing this or you feel this, but let me tell you the numbers. Here at Bloomerang, we have over 20,000 paying customers. So when someone says, hey, I think this is a problem, we have a lot of customers removing this product at upgrade, or during renewal cycle, or, we're seeing them it fall off. Say, well, wait a second, let's just look at the retention rates. Are they dropping? Are they consistent? Oh, actually what you're experiencing is you've been at the company and it's grown to 4 times the size. The N is just larger. The percentage of the N is holding. It's just more units. So there is bridging kind of feelings and observations to what is happening in the business. But yeah, I think the reason why people say they want strategic finance leaders, I think, is that point of like, hey, you can pull it all together and you have an ability to influence a broader set of people and make meaningful differences, where you can just cut through kind of the BS and say, hey, that's either not happening in our business, or that's not going to move the needle, or hey, we just spent 30 minutes talking about something that's not going to increase, revenue by 1%. Let's talk about the things that actually move the needle.
I love that. There's so much to unpack there. So back in the day, me and my little brother actually worked at the same software company. And okay. Tyler, we're very different. I'm the finance guy, more of an introvert. I have a podcast somehow. I don't know who gave this to me. And he's the sales guy who's always he's like a professional opportunist. Like if you give him an inch, he'll take a mile, and he'll do it in a way that's gracefully, and people will still like him. And I remember one time he said, hey, I was talking to the sales guys and they actually like you. He framed it that way. I was like, what do you mean actually like me? He's like, well, they've never hung out with someone from the finance department that they didn't mind being around. Yep. And he's like, yeah, you're basically just not a bad hang. I was like, okay, that's cool. Cause I just gave them a really high quota. I thought they all hated me.
Yep. Yeah. I mean, there is an element, and I think that there's obviously something about just someone's overall personality with that. But I think the other just more specific piece is having a level of empathy about everyone's specific roles in the company. And, what I would always tell a salesperson is say, hey, I've never owned a quota.
Yeah.
And especially in a high velocity business, highly transactional, I've never really had this concept where each month you start at 0. So I understand that I've never done that. So, and I know that's really hard, and help bridge the gap, as opposed to, it's super easy to be like, oh, salespeople, they're just coin operated, give them more money. But it is different, right? We finance people, we can sit in the corner of the office in our spreadsheets and never know what it's like to talk to a person or ask for an order, right? And get told no a bunch of times. For me, the most specific experience that I've had that translates to connecting with a salesperson is I worked at a growth equity firm, and a third of my job was sourcing. Ooh. So I was cold calling and cold emailing CEOs of companies. And despite I thought what I was selling was super valuable money, which they knew what they were selling was control, like the amount of people told me to pound sand or, leave them alone, or I've got this amazing thing. And while I was paid well and I was wearing my nice suit, no tie because it was casual, the thing is it was a ton of rejection and it was metrics driven. And while once you get a deal signed up, yes, then you get to do all the great finance work and due diligence and market work. And then you close the investment and then you get to support the portfolio company. But that sourcing job, that's like you're just a really high paid BDR.
Yeah, so well said. I have a friend and she was saying, I got into venture capital because I wanted to change the world by making all these deals. And I found out that like I'm a glorified salesperson and everyone keeps shutting doors on me. And she said, and even worse than that, I didn't realize that what I was selling is a pure commodity. It's cash.
Yeah, you're a little bit different. You got, selling what's different. Yeah. And I think too, like, especially when I was in growth equity, just the convergence of all of these different firms into the same strategy of like, hey, it would be good to invest in businesses that are $30 million in revenue, growing 30% and profitable. Yeah, that would be a good area to invest. Unfortunately, a lot of people have determined that that's a good area to invest.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Well, if you've listened to this podcast before, you definitely know that I think it's cool to be a fan of business. I'm obsessed with researching how the best companies operate and specifically how they manage their money. And I've learned that a company's financial stack can make the difference between world domination and obscurity. That's why I want to tell you about Brex, because I want you to rule the world. Brex is an impressive financial services and software company that has grown immensely since it was founded in 2017. In just the last year alone, Brex accelerated customer acquisition by 50%, with 91% growth in enterprise customers. And there's good reason that over 30,000 companies from startups to enterprises have flocked to Brex. Brex offers the world's smartest corporate card on a full-stack global platform that is everything CFOs need to manage their finances on an elite level. Plus, they offer modern banking and treasury, as well as intuitive expenses and accounting automation, bill pay, and travel. Wow, it's all on the roster whenever you need it. Brex grows with you. CFOs tell me all the time that Brex makes it easy to control spend before it happens, automate annoying tasks, and optimize their finances. Because listen, at the end of the day, Brex helps them make every dollar count. So if you're a fan of smart businesses too, check out Brex at brex.com/metrics. That's brex.com/metrics. Steve, you'd mentioned this concept of playing offense versus playing defense. I often joke to my team, like, hey, I get it. You're playing offense. I'm the only one playing goalie here. So like, I do have to look out for this. And I say that kind of in jest because I do in the back of my head, or I guess it's in the front of my head, because I am always thinking about it. Like, how can we get more in the way of the money? How can we spread our surface area for like revenue and good things to happen? I just want to call out that's a great point, that you can play both roles. You can't be just like relegated to only defense. That's not quote unquote strategic.
Yeah, I worked with a team and we really hated the term G&A. And we said, we're going to stop referring to finance, accounting, legal as G&A. And we're going to start referring to it as company success as opposed to customer success. Because really what you're being asked to do is solve problems for the company, right? I need to take in all of these inputs. Yes, salesperson, you want to sell this deal. CSM, you don't want us to sell this deal because they're going to churn or they're going to be a pain. Engineering, you may not want us to sell this deal because there's a roadmap commitment. And how are you solving for the company? So I liked the idea of company success. Just this morning, I was getting asked by a sales leader to approve, a deal that is a relatively bad structure for us. And it's like, I think there's something to be said of like explaining the why. It's super easy just to say no, we're not going to do that. CF no versus CF go, which Jack McCullough talks about, right? And instead it's like, hey, not comfortable doing that. And here's why. And here are like the three things, the specific things that I've thought about in deep detail about. So, because I think that's one of the things that finance leaders can do is like, hey, if you can show your counterparts that you're not just making flippant decisions and say like, I don't care, I don't own a quota, right? Like, or I don't care if you're at 98% or 100%. The reality is I do care, because inevitably I'm going to be in a room or I'm going to be in a call and I'm going to be talking about how your team performed. And what's a lot easier for me It's a lot easier when I say the team crushed it, they're at 100% of the number. Because oftentimes the finance person, you're the tip of the spear from a communication perspective. So if you're working with investors, you're either delivering good news or bad news. And while the sales team might have completely botched the month or botched the quarter, if you're the one delivering the message, right, it might as well have been you. So I think trying to establish with your go-to-market teams, like, hey, I want you to win. I desperately want you to win. It makes my life easier. It just can't be, anything goes, and let's find a balance. But meeting them in the middle, explaining the why has gone a long way for me, as opposed to I've worked with people who just would be like, nope, come back later. And it's like, CJ always says no. Like, and that's like just not the reputation you want to have in a company.
I love your name for G&A. We used to call it strategic overhead.
Strategic overhead is great.
But back to the idea of paying reps and hoping that they achieve their goals. Nothing gets me more fired up actually than writing a big commission check, because I know that I'm essentially paying for extra motivation for that person to keep pushing, and that it's also the best possible advertisement to the people around them that if you crush this, you get paid a lot of money.
When I've owned comp plans and comp planning, that's literally the first bullet point. Is like, I want all of you to get paid. I want you all to make a ton of money, because that means we hit our goals for the year and the company is doing well. And it's not adversarial. It's very much aligned. And I think that the more you can kind of, again, have a pulse, have a little bit of a personality, show some empathy in terms of, hey, I understand that this is a hard job, but I'm also going to be a partner with you to get reasonable things done. Absolutely.
How does a finance leader avoid just making the business a math problem? Because that is kind of the crutch we always lean back on a lot of times when we do have to be the CF now. How do you avoid just making everything one long formula?
Yeah, I think it's especially hard in a business like Bloomerang, where, we're low ASP, high velocity. We're closing hundreds of transactions a day. We've closed 4 deals since we've been on this call together. So
seriously?
Yeah. So it does lends itself to like, hey, at the end of the day, it's like top of funnel conversion rates. Here's what comes out of it. And you start to remove the people element. I think a couple things that you can do. One is, we were kind of talking about it before, knowing people throughout the org. So whether it was your brother, I worked at a company where I sat by one of our field reps who was based in Boston. So, and he would come into the office and I would just talk to him and learn about like, hey, what's actually happening in the field. And part of it is like, hey, you need to see the business in color, not in black and white. And the anecdotes of what people are actually experiencing is how you're going to enrich that. So for me, it's been, obviously talking to people outside of your functional area. I mean, for first-time finance leaders, man, if you're the only time you're talking to your peers is like in your weekly leadership team meeting, like you're doing a huge disservice to yourself, let alone the business. Do skip levels with people in my team as we've gotten bigger. And then we do at Bloomerang, we do donuts where you get randomly assigned with people. I never miss those, because I can learn just as much in a one-on-one conversation with a BDR who's 1 year into their career than I can learn with a director of product who's been doing this for 20 years. Because again, that BDR is the tip of the spear. Like, we were having conversations earlier in the summer about what's broken in the funnel, what's happening on our inbound versus outbound. We're a largely inbound driven go-to-market machine. And I met with one of our inbound BDRs and he painted his reality to me. He's like, this is literally the best it's ever been. We're getting such high quality hand raiser leads. Those are the people that we say, I would like to talk to a salesperson about buying a Bloomerang subscription. He said, I have so many that I can't even work the lower intent leads, which are still high intent inbound leads. And you're like, oh, okay, that's super interesting. Through 5 translation layers as things have gotten reported up, that's not exactly the story that's been told. And so layering in those anecdotes, and then for us, because we have so many customers, Bloomerang sells to nonprofits, And even here where I'm based in Omaha, Nebraska, we have over 300 customers. So meeting with customers in person has been an unbelievable enrichment layer on my understanding of the business, because again, you're sitting there, hey, what's our quota coverage? What are the conversion rates that we're going to sell? But you're making bets on what you think are going to be effective. But if you can go out and listen directly to the customers, what they're telling you, or prospects, or why you chose Bloomerang over a competitor, you start to have a little bit more confidence, because you're like, no, I'm not just the finance person telling you that we need to do more. I actually met with a customer this week or this month, or a prospect, or I helped close a deal and I heard it firsthand. It's not just me, on my spreadsheets saying, times 20% improvement. I have first party data that I can layer into my planning. And I think it's a great way that just to add credibility as that you care about the business, but also I think it makes you better at forecasting. It makes you better at describing the business. The number one compliment that I think a CFO can get, and this is just me personally, is when someone says, how do you know that? How do you, as the finance person, know that about the business? And that can be just in conversations you're having with an individual. It could be during a fundraise or transaction. And, investors ask a question and, they're probably expecting you to be like, I need to go talk to my CRO about that. Instead, you can be like, oh, no, I know the answer to that. I can answer that question. I've always just viewed that as like, hey, if I can have the most context on the business as anyone, then I can be a really good storyteller. And I can layer in specifics when you likely have a CEO that paints a big vision, great thing. And then you pepper in, yes, that's evidenced by this, or you can see that in this metric, and you can just be much tighter aligned, as opposed to CEOs hand waving, look at this huge vision, and you've got the CFO in the corner shaking his head being like, no, those aren't the numbers. Those aren't the numbers.
Steve, how do you balance the signal you get from the metrics versus the anecdotes? Would you agree that if the anecdotes and the metrics don't match, the anecdotes are probably usually right?
Well, if it's good enough for Jeff Bezos, it's probably good enough for me. Yeah, his anecdote about customer support wait times around that, I think it really, really resonates, because, again, I think that especially as companies get bigger, you're going through all of these different translation layers in the hierarchy of the business, and everyone is kind of putting their different lenses on the problem or the data. So by the time it gets to your desk, you're likely dealing with a heavily edited, heavily filtered view of something. And I think that you're never too big in that example to be like, I'm just going to call support, or I'm actually just going to look at the deal notes in Salesforce for all of these things. And the biggest thing is just don't be afraid to do the work, right? So I think it's not super productive just to be like, oh, I don't believe that. Well, that's not like, I don't know if you're going to convince someone of that. Like, you're telling me something, CJ, and I said, I just don't believe it. It's another thing to be like, we should validate that. And in between our meetings, I'm going to go look the data myself. I'm going to talk to people. Someone at Bloomerang had a theory about something that was happening in the sales process, basically setting bad expectations with prospects. And then the implementations team was capturing it. And they were basically describing the sales team as doing something nefarious. I said, I don't understand why a sales rep would do that, because it's actually shrinking the deal size. And they're paid based on ARR. So I said, let's just go talk to the implementation team. Went to talk to the leader of the implementation team, talked to implementation managers. And I said, hey, do you think this is happening? And they just looked at me like, what? No, that's not happening at all. But it's something that someone, very, very opinionated, said with a lot of authority, this is happening in the business and it's bad. And then you have a 30-minute conversation about, well, we got to fix this. And I'm sitting there being like, I don't think that's actually a problem. Maybe you should validate that it's actually a problem. So I think not being afraid to just be like, especially, we're largely we're mostly a remote company. Everyone's available on Slack at any time. I'm just going to Slack someone and ask them, hey, you're not in trouble. Just want to know, do you think this is happening across the business? Usually someone says, is my response going to impact a really big decision? I say it'll be one data point. It'll be one data point.
One game-changing data point. We had spoken to Shruti Lanka, the CFO of Public.com, and she had said, CJ, the CFO has the green light to sit in on any meeting that he or she wants in the entire company. Now, it doesn't mean you have the right to like interrupt or like throw the meeting off or just ask your own questions, but you do have the right to sit in on it. And I just thought that was so powerful.
Yeah, I think the biggest thing, especially for people maybe earlier in their career, finance leaders, is you want to establish a reputation of all the things that we're talking about so that you're invited into the room, you're invited a seat at the table. I think part of the problem is that, CFOs, finance leaders be like, I demand to be in that meeting. I demand a seat at that table. So from the very onset of the interaction, you're already off from a framing perspective. I'm here to moderate, monitor, be the chaperone of the meeting, whereas opposed to, hey, that finance leader or that FP&A leader, oftentimes, right, it's really your both you and I came from FP&A. So oftentimes it's, man, my FP&A leader, he kind of understands my business and he's super methodical and he's super analytical. He knows how to translate what we're experiencing into the numbers that would ultimately make sense to the CFO, to the CEO. So I want them, right? You want to be embedded with the teams. You want people to be pulling you in. It's much better that you are feeling, man, every team is asking the FP&A team to help in various areas, as opposed to, I can't get time with engineering. And you're like, well, what do you mean you can't get time with engineering? They don't want to talk about their budget. I was like, well, wait a second. Like, how are we so misaligned? Like, we should be providing value in the conversations.
Yeah, if they don't think this is important, then something's off the rails here.
And that's not. And bad finance leaders will say, well, that's an engineering problem, right? They need to know this is important. When I would say, no, it's the finance team's problem, because they have established no credibility with their business partners that they're going to provide anything of value. And then they're going to join a call and say, oh, CJ, it looks like you're off on this GL line by 5%. No idea why. As opposed to, if you actually spent time partnering with the business and understand what these things are, you start providing those insights proactively, as opposed to, I'm going to grill you for the next 30 minutes in our monthly business review about why you're off on these things, because I actually don't know what your team does. I don't know how it relates to what we're trying to do as a business, but I'm going to inspect it. And I think that's where you just start to lose all this credibility.
Yeah, you lose credibility with the public lashings. At the same time, there is this element of playing umpire and you have to call some balls and strikes. So how do you as a CFO deal with that inherent friction?
Yeah, so I think you can't have, anytime there's something important going on in the business, you likely are going to need a good cop and a bad cop. And so one is being super aligned with your CEO of who's playing what role when. I think the other thing is if you take all of the things that we've talked about before about, hey, people generally like working with you, you want to help the business, you're seen as a collaborative business partner. When you do have to call, and I guess in this case, a ball, right? Like, hey, this is out of the strike zone, this is not right, or this, we can't be doing this. I feel that if you've built the reputation of being someone people want to work with, someone that's going to add value, that when you do, call out something that is not working or something that's off the rails, I think you have more credibility, because you're not the boy who cried wolf. You're not the one who's always making a big deal about everything, and you kind of pick your spots, right? You're like, hey, I'm not going to make a big deal about everything, but there are times like I've gotten feedback before where it's like, ooh, you were pissed in that meeting. And if you were pissed, it probably means it's a really big deal, right? Like, because you have a high tolerance and you're not going to make a big deal out of everything. So when you do, it's a little bit like, ooh, it's kind of like you have kids, right? So it's like a little bit between like mom versus dad. When dad's, I oftentimes am just the fun parent, right? I work all day, I pick up the kids and like, I'm going to have fun. But when I get mad, my wife always says like, oh man, your dad is mad now. Right.
Oh no.
And I think there's something to be said about that. And part of it's acting, all of this too is like, it takes a little bit more work to develop these relationships and to earn the credibility, but it's all in your own self-interest too. It makes your life easier, right? Like, unless you're just a glutton for punishment and you only want conflict in your day and you want to be the asshole and then I would just say, well, you're never going to be the strategic CFO.
Yeah. Sometimes I wish I enjoyed the friction more because I don't like it, but I know I have to take some body blows. Hey, we were talking to Sonoe Terrero, the CFO of Envoy, and he had this amazing saying. He said, you've got to butter somebody up before you poke them. And what he means is you can say no to things and be the bad cop if in the past you have helped break down barriers and help them achieve things that they needed your help on, because it proves that you're not just going to say no all the time. And if you have to say no, you're doing it out of a place of like, this is best for the business.
100%. You've proven yourself to the business to be a rational actor. You're going to give on some things. You'll acknowledge, hey, this is a little bit aggressive for us, but in this case, I'm okay doing it. So then when you do need to say, no, we're just not going to do that. That doesn't make sense. It's not, man, CJ, you always say no. Of course you're going to say no. Because the thing too is if you're just the constant CF no, you're always going to say no to everything. Only thing you care about is this super tight control. Well, people are just going to go to the CEO. And then the worst thing that can happen is you say no to something and then the CEO comes over the top and says, man, I don't know what CJ was thinking. This is a good idea for the business. I want to say yes. I would much rather be like, go to my CEO proactively and say, here's the scenario. I went ahead and said yes. It's an aggressive stance, but here's why I said yes. And have that conversation as opposed to, yeah, sales leader came to me, really big strategic deal. They wanted to give more away than our standard discount. I told them to fuck off.
Have you ever had a sales leader blow up at you?
Yeah. There's definitely been, I mean, I think the hard thing, right, is what they talk about, like the balls and strikes. And, especially in, I'll call it venture-backed, high stress, pressure cooker type environments, there's inevitably going to be friction that exists. Mm-hmm. And I think particularly bad sales leaders, you may have a CRO title, but you're acting like a frontline manager and you're not putting the business first. So yeah, have had a sales leader call me unethical, say that, I'm doing all these terrible things for the business and willing to fight me over it when I know like, hey, like, I know that that's not the case. Right. And even though, I'm earlier in my career, like I know that's not the case because here are the things that we're doing every day, right, to help the team and add the credibility. But I think a lot of times a weak leader is looking for an excuse, is looking for someone else to blame. And I oftentimes, like if you have a centralized revenue operations team, it's a lot easier to blame. I'm a go-to-market leader. It's a lot easier to blame RevOps because that team doesn't roll up to me. Where you would never talk about someone openly with other leaders who sits directly on your team that way. But I'll be super quick to say, oh, this other team I'm relying on is what's preventing me from closing this big deal or from hitting quota or crushing the plan. And you're like, well, wait a second. You're telling me this one person or this one team is completely stopping you? Well, what are you doing about it? Right?
Yeah.
And it's like, well, no, that's not really the case. The case is that person doesn't report to me or that team doesn't roll up to me. So I can just blame them because I don't really have control over that team, which also just means you have no influence over your over your peers.
And it's hard for people to see the whole picture as we do sometimes in our seats. And a lot of what you're trying to do is to get the company ready for a bigger event, some sort of equity outcome that in like the microcosm of the sales guy, he doesn't realize that this one deal, like it's everything to him, but company wide, you're marching towards something bigger. And if you let this one edge case slide, then it's going to lower ASPs. And then over time, it's going to degrade, the revenue forecast that you have, et cetera, et cetera. We had spoken to Stephen Grist. He's a 7-time CFO. And he said that when you're a venture or private equity backed, you're essentially always up for sale. And a lot of, I think, what CFOs do are making sure that, hey, if they're going to be people kicking the tires, we look like we're in good shape here. Do you agree with that statement, or do you think it's over the top?
No, I think it's spot on. I think oftentimes CFOs will say, let's call it transaction readiness, always being ready for a transaction. They talk about it as if it's this side job. It's something that I need to dedicate some time to on the side. And the point being is if you're an investor backed company, whether it's VC, growth equity, private equity, your job as the CFO is transaction readiness. Accurate, timely financial statements, managing risk. Those are all the table stakes. If you're in a board meeting and you say, oh, we got the audit done and that's what I got done and that's what you're going to hold your hand on. It's like, you're not delivering any value. You're certainly not strategic. So transaction readiness is not only your job, but it's your job from day one. So, we have similar backgrounds, like starting in investment banking and then doing investing, always viewing the lens of what the next investor or what a strategic acquirer is going to ask for has always been how I try to ramp on the business. So whether it's during interviewing and then once I'm in the seat, I'm basically diligencing the business. I'm starting to collect information. As I learn, organize a data room, right? Hey, I'm learning all of these things. Why don't I just organize them so that I'm ready to go at any time, as opposed to people think about a transaction as I'm going to hire an investment banker and we're going to run this process and I'm going to be in so much control. I'm going to have this time to gather everything and then we're going to iterate on it. Well, what happens if you get an unsolicited inbound offer? You don't dictate the timing, especially if it's a good offer. So you always have to be ready because you're actually not in control, right? You're only in control if you have no investors and you're the CEO and you own 100% of the business.
Yeah. And I think there's this misconception of transaction readiness being we're always actively in market. It's no. That's actually a bad look if it looks like you're always up for sale. What we're talking about is to have the right processes and have everything documented in a way that hey, you can get a clean look at this if you really need to. If we think this is a worthy opportunity to take a look.
Yeah. When I was at Flywheel, where I was before Bloomerang, we were not for sale. We were not in the market. We got an unsolicited inbound offer from our largest competitor, WP Engine. And it literally was, hey, we should talk. And then it was what's this gonna be about? And literally we met with them in person and we just kind of talked about the mutual respect that we have for each other's business. It wasn't super transaction oriented. And then 2 days later, we got a letter. It's not even an IOI. It was really a letter that said, we would like to acquire Flywheel. Here's the price that we're willing to pay. But there was nothing else. There were 0 deal terms. It wasn't a term sheet. It wasn't any structure. It was just a price. Okay. And from the day that we got that to the day that we closed the transaction was 31 days. If we weren't ready to transact, right? There's no way that could happen. Not to mention WP Engine's largest investors is Silver Lake. Silver Lake's we bought Dell. When we bought Dell, it took this many days. You're not as big as Dell, so we could do it, 1/100th the speed, right? And we have an army of people to deploy into. So if you're not ready, we didn't even have outside counsel lined up. We obviously hadn't engaged a banker. We didn't hire a banker. And we aligned on price after a couple days of going back and forth. We aligned on price. And then they said, okay, let's go. By the way, we're going to do all business diligence, which in that case was confirmatory because they knew enough about us. And then we're going to do all legal diligence and negotiation in parallel. So from a work stream perspective, you're answering all the diligence questions, which if you didn't have things ready to go, you didn't have monthly dashboards, you didn't have decks about the company, you didn't have all the legal documents neatly organized, you would get sucked in all there. Whereas the real value was actually all the deal points, because the letter that we signed actually didn't have all the key legal negotiated points that you would literally usually go back and forth one by one on while you're doing a term sheet. We did it all in definitive docs. And what that led to is each thing was kind of viewed as a one-off, right? Like, hey, escrow or employment agreements or add backs to purchase price, all of those things, because we were trying to move so fast, were isolated one by one. Whereas if you go fully negotiated term sheet up front, you'd have a more holistic view of the deal. And you'd be like, well, we're trading here, we're not doing this. But because we were equipped to go so fast, we actually built momentum through the deal. And it was just kind of like, okay, we can agree to that, let's move on. We can agree to that point, let's move on. And then when all was said and done, we hadn't given on any deal points. We hadn't caved on anything, and we got the deal closed. So part of that was being ready for the transaction, because, I mean, think about it. If all of a sudden, they're asking some question and you're like, oh, shoot, I've never thought about that ever. Like, I'm going to go spin, I got to do the analysis, I got to find the data, right? Like, I've never viewed the business through that lens. You're going to be sucked into this vortex, and the deal, like, then the lawyers are just going to be talking in isolation. You're going to lose control of the transaction. So readiness, it's all about being able to be on offense as opposed to defense.
How many days from start to finish?
It was 31 from the actual letter. And I call it a letter because it was, like I said, it was no defined deal terms. So, and that included Memorial Day weekend as well. So, we hired outside counsel on Memorial Day.
Oh my goodness.
Yeah. And they had never worked with us. We hired Goodwin, who was fantastic, and I had worked with before, and we work with here at Bloomerang. And it was literally like, hey, let me tell you a little bit about Flywheel, and let me tell you about this transaction. And it's like, wait, what? And the thing is too, is like the advantage of the more information that you can have solo, the faster you can go. Because think about it, it's like, well, shoot, you want to get the overview of the business? You know what? I can give that to you. As opposed to, let me get some time with my management team. Let's pull them off of what they're working on. Let's just keep the momentum going on this, because, you're ready to go, we're ready to go, and we're not going to slow this down. Not to mention that every question in diligence, even if it's like a super small little thing, is an opportunity for you, the seller, to give them more confidence in what they're buying. Whether it's a stupid little thing, the tighter you can be. I'm going to send you something, it's going to be expertly, beautifully formatted, right? You may ask for the raw data to do retention analysis. I'm going to send you the raw data, but I'm also going to create all the outputs that I think you're going to create, right? So then it's just like, oh, we're not asking questions that they're not thinking about. They actually have a ton of control, understanding of their business. And then all of a sudden, it's checking the box on diligence. It really is confirmatory, and it's not, oh, we got this issues list. The CFO sent us this file. We did all this work. And then one day later, he sent us an email and said, actually, that data was wrong. I got it from my controller. He pulled it wrong. I didn't look at it. Here's the new file. Don't worry. This is right. Maybe that a deal can close over that. And there's probably thousands of deals that do close over that. But on the other side, people are like, oh, wait a second. What are we buying, or what are we investing in? And it's like, you want to avoid any knocks against you throughout the process, because it's already hard enough to get a transaction done. So how can you push through and not slow something down?
What you're describing is making sure that something stays on the rails, right? It gets to its destination. And part of that's building credibility at every checkpoint along the way, small or large.
100%. And I think the other thing too is CFOs often think that, hey, on something like this, it's just going to have to be all me, right? This is the CFO. I'm just going to put my head and get down through it. And I think it's super short-sighted. You know what shows a lot better in diligence is having a really kick-ass team. And saying, actually, you know what? For this call, I'm getting our controller and I'm getting my FP&A leader on. They're so far in the weeds. And I know that one, they're going to show well. They're not going to say something dumb. They understand the game that we're playing here in diligence, right? It's not just like they're not going to just go off script being super tightly aligned. That's why for me, always, I'd rather have, a smaller team of Navy SEALs than a huge team of infantry, right? Like I want specialized killers, and I will pay you more. I will give you more. I will give you more latitude. I will give you more responsibility. We're going to go a lot harder. I'm going to ask more of you. Oftentimes CFOs will be like, well, when I talk about my team like that, and I know I've talked to you about it, people are like, well, I could never hire someone like that. I said, why not? Well, I don't know if I could pay someone to go do that, or my internal recruiting team isn't surfacing anyone like that. It's like, well, aren't your direct reports like the single most important thing determinant of your success? The CMO of Pendo had a quote that was team determines tenure in an investor-backed company, and that how CMOs and CSOs and CFOs get longevity in their role is they build kick-ass teams. And the way that you do that is you go out and you say that my job is to do that. I got to get all this other stuff done, but what I need to do on top is I need to find these great people. And like at Bloomerang, I talked about before the company, we called it company success. At Bloomerang, we don't call it G&A, we call it GSD for get shit done. We've got t-shirts, we've got logos, right? And it's literally the ethos of the team that people live and breathe. And it's got to a point where the team's big, across all the teams that roll up to me, it's like 52 people. And now I've got people proactively coming to me and being like, hey, Steve, I'm not sure CJ is really GSD material. And it's someone on another team. And it's like, it becomes self-reinforcing because it's like, we've established the credibility as the team that isn't afraid to do really hard work, isn't afraid to go really hard. And we're now at the point where we're holding each other accountable. If you think about building your team as just going through the motions and just something I've got to do, I've got to get a controller, I've got to get an FP&A leader, I've got to get IT, right? Like you're never going to have that. And instead, you're going to be talking to your peers and saying, oh, I could never have a controller that understands the business. I mean, our controller at Bloomerang basically runs the deal desk. Wow. At what company is a controller so in tune and ingrained into sales that they know what to approve or not? And
what a good deal looks like. That's wild.
Yeah. And the thing is our controller had been a CFO before. He's a really strong controller. He's super competitive and he loves to win. So he's even coming up with ideas on pricing and packaging, and that's our controller. So it's like if our controller is doing that, our FP&A leader is crushing it. Our IT leader's the same way. Our HR leader, like everyone is kind of bringing that version to the table, and it becomes infectious.
And I would rather a team of assassins, a team of Navy SEALs than a fiefdom.
I was on a call this week with the FP&A team and the accounting team, and we were talking about changes that we needed to make in NetSuite in advance of 2025. Talk about a boring topic. But literally, it was two groups of people that wanted the other team to be able to do their job better. And they're like, yeah, we could totally do that. Why do you need that? Oh, we can solve it this way. Where I've worked with teams before where it was like FP&A and accounting were so diametrically opposed of like, accounting was like, no, you do not touch the financials. You will take what we give you and you will like it. And it's like, so that fiefdom of like, hey, I'm over here, you're over there, and like, yeah, we have to work together, but I'm not willing to invest at all in that relationship. No productivity comes from that, right? And then it's like, Can you imagine like, oh, I've got to go to the CFO to loop him in because the controller and his accounting team isn't giving me the data I want. What do you think that CFO is thinking? My God, save me from this. Save me from this. My own team is the bane of my existence. Yeah, so it's the exact opposite for us here at Bloomerang.
Steve, this has been an all-timer. In fact, we've all voted, me and my dog Wally, and we want to make you a frequent friend of the pod if you're cool. So you can come back, share insights, and also give us updates on your Lego collection.
Yeah, absolutely.
Thanks, man. Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.